How are you, folks? The Enzo DiCostanzo podcast. We have our third assignment for the semester in the fall 2023. So let's hit that. Okay, and this is the assignment is right here for everybody that's in my classes. We're because this is such an important topic, and this has got there's the international part to this, there's the regulatory part to this, there's the finance. This has everything we need is in here. So let's stop kidding ourselves, all right, and just discuss this. It's due on the 30th, and I mean, look, when stuff is if I knew something was due on the 30th, to me that means the 27th. Okay, but you guys in these classes, everything is late, and you go into the extreme end and even past the extension to get it done. You got to stop living like that. Okay, you got to get stuff done early, well done early. Okay, you have to work like that, folks. A couple pages. I was getting a couple emails saying, "Oh, how long?" Kind of a thing. And actually, if you guys give me a second here. What do we do for the bubbles thing? Somebody dropped me an email recently. Yeah, I want to change this wording to posted instead of submitted. Posted as if I gotta go through everything and change everything. Sometimes can be posted like that, and deposit your assignments. Yeah, on Blackboard. Yeah, posted is the better word, I think. And actually, these are the answers. So I want to be careful with this. So what do we do here with the about a half a page each or thereabouts, a little bit less. Yeah, about a page and a half for all that stuff each. Yeah, that was so somebody had asked about that. So yeah, we could do that as a page and a half. So close. And actually, just while we're here, if you guys don't mind, one. What is this? I don't know what that is, but I'll close. And everything's got to be posted. We want everything posted. This, posted that. Posted. And this is going to be YouTube. And see, again, if you have PDF Writer, just go to save file as PDF, and that's it. And we're going to replace this particular one. Everything's got to. I'm not going to go repost all these things, but it should say posted, not submitted. I don't know why I wrote it like that. So YouTube, posted, which is fine. We got that one. I think I'll do the second one. You guys just bear with me while we do this. Yeah. Posted. That. Okay, and the capitalize YouTube, you. Posted. Yeah, this has got to be posted also. Posted. Like that. YouTube, good. All that. And this save as PDF. Save. Okay, we did that one. And actually, this is the third one. What about the second one? Did I save this? Again, just save as Adobe PDF. That's it. Save. And yes. Okay. Which is that? We spoke about the gram stuff. Okay, folks, thank you for a little bit of patience of that little bit of bookkeeping that we had to take care of, and we'll, as we go forward, we'll make sure we use the appropriate words in here. And let's not worry about these questions right now. But what you should, what I'd like to worry about is the following. There it is. Okay. What's a qualified investor? This came up recently in a project, and I just want to go over this with you guys. Right. It's referred to as an accredited investor, or and actually this is the assignment here. So let's close this thing. Oh, yeah, I want to just do. I just want the answers part of this. Okay. Yeah, another word is accredited investor, and you might not. You'll say, "Oh, well, I'm never going to have to deal with this." Well, I didn't think this is something that would come across my desk in the world that I live in, where everything is just millions and millions and millions of euros and millions and millions, tens of millions, hundreds of millions of dollars, those kinds of numbers. Everything is that. I said, oh, well, this will never cross my desk, but we have a project where it's a healthcare project, and I think to incentivize doctors to come practice. It's not in America; it's in the Middle East. To incentivize doctors, I think that there was a promise made by a former financial advisor that said, "Oh, you'll all be shareholders. You're going to own everything," and it was all just lies. Okay, it was all lies. I mean, it was terrible, terrible lies. Really bad. So you can't look if there's a project that's 100 million and you have $100,000. That's not even close to being, in the ballpark of partnering up with someone. It just there's just no way. Now, there's other ways to do besides the capital. Okay, if you're very like I'm extraordinarily high skilled and have a lot of expertise and a lot of experience, that makes you sophisticated enough to involve yourself and knowing what you're getting involved with and knowing the risks and being able to bear the brunt of the if there's losses or something goes wrong, those kinds of things. Okay, but we had a situation where there was this and still people are still running around saying the same old thing, because it's someone put it, a very good salesman put it in the ear of these medical professionals that you're going to own this thing, for 1/10 of 1%, you're going to own 90% of the venture, and something just ridiculous like that, and it's just nonsense. It's just complete nonsense. So anyhow, so let's roll through this now. Here's the other thing too. We would do a lot of international work, and most likely the majority of our work for the next decade is going to be international. And today is October 10th or October 7th today. So there's an attack in Israel, and you know that's a battle that's been going on for quite a long time. I had a former director of a program director at Rutgers long ago explained it to me, like like the majority of the students I'm speaking to now, your lifetime ago. This director at Rutgers, who was Jewish, who explained it to me, had maps and pictures, and he had a lot of political commentary about what was going on in the Middle East. And it's funny how all these years later, I haven't spoken to him in a long time. I think 7 or 8 was maybe the last time I spoke to him. I think he's long gone. But he I remember the Bergen Record. He would write for the Bergen Record. He'd write political commentary, and he was in the math department. So I don't know if I could ever work from today, but I think he's certainly long gone from there. But yeah, so but that happened today. So certainly, so when you're working internationally, you want to have a good point of reference, because a lot of the SEC rules of other countries, like fill in the country, the Greek Securities and Exchange Commission, the Italian Securities and Exchange Commission, really models itself on the American markets. I've never, and I said this in one of my classes, because someone said to me, "Oh, so we're looking at American economic models." Well, I've never worked internationally and had someone say to me, "Oh, by the way, we want to see the French version of this economic model." I've never had that happen. Maybe there's people who do look at it that way, but I've not encountered that often or at all. You want to sit here and think about it. Hedge funds, venture capital funds, private equity offerings, private placements. These are all very sophisticated situations and instruments and vehicles and things of that nature. So you have to understand it legally and financial risks, and you have to know what you're doing with this. And there's two tests, legal tests. There's an income test. There's a net worth test. Okay, so we're going to look at those. And I'll try to make these a little bit bigger, because a number of you are saying, "Oh, it's the font is too small. The font is too small." So better like that, and maybe even 160, I think, is even better. even yeah, I think 170 somewhere with the Excel. I think it was 170 was relatively good with that. But like I said, we're gonna look at qualified investors, and we're also gonna look at the SEC and also the Securities Acts of 33 and 34. We're going to look at that. So we're going to have this is a very nice set of questions for you guys. A qualified or accredited investor, there's two, you have to meet one of the two criteria. I taught tax accounting a couple of years ago. And it's these types of tests, these very legal tests that are out there. You have to have you have to earn an income by yourself. So there's four scenarios here. You have to earn an income by yourself of 200,000 a year, and the previous two full calendar years, and a reasonable expectation that this year you did that. So for 2021, 2022, you made 200,000 or more a year in income, or combined with a spouse, you made 300,000 with your wife, kind of a situation. Okay, but that's in and of that's by itself. Okay, that's by. So if it's just you, that's 200,000. So for the previous two, or you have to have a net worth of greater than $1 million. All right, and for this one, it's either by yourself or combined with a spouse, and it excludes your primary residence. So, yeah, and also, I think you guys have a numerical example to work on, and we'll look at that and see. But I want you guys to sit there and think about what you're doing with that. But that it's so what now, if you have, I think the example that you had or that you're going to have was something like this, where you've got to piece together a couple different investments and what your net worth is, and 250 a year for the last a couple years, that kind of a thing. And you've got to do a little bit of a, but I want to leave that to you guys. I really want to leave that to you guys to work, and I don't want to just sort of give that away. Okay, so that's the point of the exercise. And folks, let me tell you, these sort of examples, there is no back of the book. Notice how I very rarely. I remember when I was teaching calculus and physics, that I said, "Oh, the back of the book, the back of the book." Yeah, I cared about that a lot. Okay, but now it's when you're out, it's just got to make sense. It's certainly got to be legal, and God forbid it goes to court. Which, like I said, I've said this in class. I don't like to drive past the courthouse in terms of my thinking, but that's what we're doing here with this. Okay, so you want to be able to make a good decision with this, given us a scenario or situation, and be able to assess or apply these two tests. Okay. Yeah. So, and then it's the same method must be applied for the income test in all 3 years. Single or joint. Yeah. So, yeah. So the income test happens across the previous 2 years and then the current one. The other version is $1 million by yourself. And folks, let me tell you something. And I'm thinking of the project that we have. Even if people had this kind of financial profile, even this isn't really enough. Okay, in a sense, where especially in private equity deals, if you're dealing with $100 million project, we've bit the bullet and gave someone like a 30% piece or a 20% piece, which is like 30 million euro. Okay, so it's not and that's considered a minority interest is what, and actually it's even debt, so it's not even equity, it's even debt. So okay, and your primary residence can't be lumped in with that. It's got to be in addition to your primary residence. So it's got to be $1 million either in cash or securities or other real estate, but your primary one is not taken into that computation. Unregistered securities, this type of ownership they're going to try to verify your eligibility. They're going to request tax returns, W-2 forms, which we talked about a number of years ago, bank statements, other kind of information that just verifies your financial profile. So if you're putting on money into an unregistered investment, there's going to be a thorough verification process, and certainly with crypto and all these other kinds of areas. I think the veil got pulled away recently, and it turned into a bunch of phony baloney, thin as paper situation. Okay, money's got to be backed by the confidence of the government issuing that money. Okay, and hopefully we'll get to a point where we have our own currencies, but that's a big industry. arbitraging currencies, and it's hard to, and it's probably a very powerful lobby, so it's probably very hard to figure out. It's probably very hard to figure out how that is going to go away, and the bite that people, the first people who are going to not have the opportunity to arbitrage currencies anymore, what are they going to do? That's not going to be fun. So again, we sort of repeat ourselves here: qualified investor, accredited investor, hedge funds, venture capital funds, private equity, high net worth or high net income individuals or entities with the idea that this group has sufficient financial sophistication to understand and accept the risks of investments and that the general population cannot. Okay, you don't want people in over their heads. For some people, investing in the S&P 500, they're in over their heads, not even really understanding that. Okay, so you have to be very careful with that, and certainly with the Dodd-Frank reforms, which I have not read those 200 or 700, whatever it is. It's a lot of pages. It's I don't know if it's 200 or is it 700. I might be 700. I have it somewhere. The Dodd-Frank legislation. Let's see if we can find it. I have to apologize, folks. I was on a call earlier today. Dodd-Frank legislation. There it is. Congress. It's 850. It's 850 pages. So square away a good summer somewhere to read this and really understand it. Really read it and really understand it. It's 850 pages. How about that? That's a lot. That's a lot. It's that long so you don't read it. Okay, I'm not kidding. So anyhow, when calculating net worth for the purpose of determining accredited investor status, the value of the primary residence could be previously included, but while it could not when determining qualified investor status, however, this is no longer the case. Okay, so qualified investor and accredited investor used to be different, and now they're the same. Yeah, for now, or this. Okay, qualified and accredited. Okay, well, for now, these are the same. And this was Motley Fool. Okay, this just came out a couple years ago, so this is not that old. I don't know if they're the same any longer, but again, this is not a legal class. So certainly if this was Queens College, paralegal program, we would really care about that. That'd be really important. Okay. But as of now, these two terms, but certainly if there's a legal distinction, you can't just say, oh, well, they're the same to you. You can't make that decision. Certainly if something goes to court or what have you, that's gonna matter. Okay, that's definitely gonna matter. So, but they must ignore the primary residence or qualify for both identical. Okay. Yeah, so maybe one of them includes a residence, one doesn't. So rolling back the requirements for becoming accredited, removing the primary residence restriction. However, the are identical and the terms can be used. Okay, however, for now. Okay. So another use of the term another meaning of these things can be found. Yeah, in the Acts. Yeah, the Acts of 33, Securities Exchange Act 1934. Okay, now Graham Leach. I have this somewhere. I forgot what this is. What Graham Leach is. Let's just quickly look up what Graham Leach is. This is published. But this is this the one that separated commercial banks and invest? I think that's what this was. This separated the commercial bank and the investment bank. I don't like Wikipedia, but okay. Repealed Glass-Steagall. Yeah, banking companies, insurance companies. Yeah, so you can't have a company that's two combined as investment bank, commercial bank, insurance company. It's all that. Yeah, that is what that was. Anyhow, but we're not Graham Leach. We're not going to talk about, and we probably should have, but I'm not going to talk about that in this course. But Securities and Exchange Act of 34, we're definitely going to talk about the Securities Act of 33. We're going to talk about. Okay, so, and also qualified investor allows banks to sell securities to. Or such as registered investment companies, other banks, individuals who invest at least 25 million, and governments with over 50 million, without registering as a broker dealer. So yeah, so this is this part of it here. It says to allow banks to sell securities. And so yes, in other words, anytime you've got to register as something, there's more oversight and there's a legal cost, and so for these levels of slivers of the like they say, tranches, or these slivers of investments. If you don't have to be a broker dealer, and you can sell now, again, if you're a couple people selling these types of investments, that's going to be pretty lucrative. Now, if you're got 1,000 people and they're expecting to make, $500,000 a year, that might not be the best. Or if you just do a lot, like a big volume business of this. Okay. But there's individuals, small groups of people who can sell these things. And we're one of them. Okay. That's doing things like this. And certainly our numbers are even a little bit higher than this, but it's this area of an investment. And we're not registered as broker dealers, but we do everything as a private transaction also, which covers this. Venture capital fund, your net worth is 600,000. You made 250 for the last couple of years. It depends on which of these. You have to. It's one of the two tests you got to pass. So, it looks like the income test you pass, the net worth test you don't. So, you qualify under income and can be allowed to. Okay, so it's just the income. So it doesn't even give a conclusion for the net worth situation. On the other hand, let's say you're married, have a net worth of 800,000. Okay, and then you earned 180 2 years ago. The spouse earned 150, so that's 330. Last year 250, but the spouse didn't work. And you expect similar income. While you combine the 2 years ago, your individual income last year for the current year is sufficient. You to use the same type of income for all 3 years, so you do not qualify. Yeah. So in other words, you can't say, well, 1 year, and this is another sort of scenario. My wife and I, and see, this is what I don't like about marriage. Okay. And folks, and I'm not trying to be cold or terrible here, but I remember Queens College, one of the guys, the professors told us, he said, Queens College True was a couple of years ago. That wasn't very long ago. He said something to the effect of, what did he say? He said something like, when you get married, he goes, all marriage is a contract to combine your assets and liabilities. He goes, that's it. He goes, and you're going to net out those numbers, and you and your wife are going to be equity holders in all of your problems or something. He said it's something like very, but he was happily married. I think he was a happily married guy. He was a guy from Rutgers, but that's what he said it was. I thought that was funny. So, but in other words, though, so yeah, this whole joint filing, stay away from this. Okay, it's what you do. You need to concentrate on what you do. So if you combined with the spouse, you made more than whatever it was, 200,000 or 300,000. And then by yourself, you're 250. The spouse didn't work, so you're not over 300 with the spouse. You have to use the same. You can't say, well, 1 year it's me and the spouse, 1 year it's not. You can't do those. But again, if you look at the press releases or the sort of the instructions from the Internal Revenue Service for America, you could spend a year reading through everything. There's example. It's like a textbook. It's like a textbook published by. It was I enjoyed teaching tax accounting. I enjoyed it, and I want to do it again. But it's it's very complicated. It's very time consuming, and there's people. That's why if you go to work for an accounting firm, you're not going to. Oh, I'm management consultant this week. I'm auditor next week. Then I'm doing tax season comes. I'll do tax accounting. You got to pick one of those and just be good at it, and be a specialist in it. So, okay. And then, so now we have here, again, net worth, income, asset size, governance status, professional. So yes, this is, if you look at this, we're sliding into the area of what you're going to do for your home, what you're doing for your assignment. A business entity that's allowed to trade securities, may not be registered with financial authorities. And again, you're not registered. So accredited investor, you're not going to be registered with any financial authority, but you're also entitled or have access to, I'm saying you have to pass the net income test, the net worth test, or the asset size test is the net worth test, some kind of governance status, or if you're a finance professor or you're really and we're applying for banking license in Europe, and certainly having me be a professor of finance is tremendously useful. It's a tremendously useful thing to put out there. Okay. It says the term accredited investors used by SEC under Regulation D to refer to investors financially sophisticated and have reduced need for protection provided by regulatory disclosure filings. Accredited investors include high net worth individuals, banks, insurance companies, brokers, trusts. So again, it allows you to either not be registered. It allows you to sort of play in a different arena that maybe a lot of people wouldn't be allowed to. So here, let's look at the rules again. It says accredited investors are investors who are those whose individuals classified by the SEC as qualified to invest in complex or sophisticated types of securities. To become accredited, either by yourself, you're making 200,000, or with a spouse or domestic partner, you're making 300,000, or working in the financial industry. Sellers of unregistered securities are only allowed to sell to accredited investors who are deemed financially sophisticated enough to bear the risks in America. Now we're taking this idea with us across the Atlantic and across the Mediterranean. But certainly, it's a good guidepost, even though we may not necessarily be bound by this, even though we're American, but the project is happening overseas, and we're going to have to talk. Certainly, we're going to have legal counsel advise us as to what's going on, and what we have to adhere to, and what we don't have to adhere to, being Americans but working in another country. But we're also it's it's our money, but we're also we're attracting the major investors are certainly far far in excess of what the tests call for. Unregistered securities are considered inherently riskier because they lack the normal disclosures that come with the SEC registration. Many companies decide to offer securities to this class of investor. Oh, yeah. This is a good one. Okay. So it says accredited investors are legally authorized to purchase securities that are not registered with regulatory authorities. It's a class of directly because the decision allows companies to exempt from registered securities with the SEC and say this. Yeah. So, this whole thing. And again, the expense of registering and if there's a process, if you got to wait for some kind of an approval. And it says the types of share offerings are referred to as a private placement. Okay, which I've also spoken about with you guys in the past. Presents these accredited with a great deal of risk, and the authorities need to or want to make sure that you're financially stable, you're experienced and knowledgeable about the risky ventures. Now, again, to me, just being a patriotic, dyed-in-the-wool constitutional guy living in America, for the government to have to come in and say, "Well, we're gonna hold your hand while you make these investments," that it just strikes me as something that the Alexander Hamiltons wouldn't have really wanted, or that's not what they were trying to accomplish in America, and that it just strikes me as very off that we're doing something like that. But we're doing it because then people rise up and say, "Oh, well, we were fooled." And what did the government do? And again, this is big government, right? When you're doing things like this, and the government has to sort of look over your shoulder and say, "Oh, are you okay to do this? Can you swim? Right? Can you swim in the deep water?" So when companies decide to offer the shares to accredited investors, the role of regulatory authorities is limited. Yeah, it's a verifying or offering necessary guidelines for setting benchmarks to determine who qualifies as a accredited investor. Regulatory authorities help to determine if the applicant processes or possesses the necessary financial means and knowledge to take the risks involved in investing in unregistered securities. And again, venture capital, hedge funds, angel investments, and deals involving complex and high-risk investments and instruments. And this is just the rules again. I know there were some other changes here with this. It says to be an accredited investor, actually, these are some of the requirements. The regulations for accredited vary from one jurisdiction to another and often defined by local market regulators or competent authority. In the U.S., the definition of an accredited investor is put forth by SEC in Rule 501 Regulation D. An accredited investor must have an annual income exceeding $200,000 or $300,000 for joint incomes for the last 2 years, and the expectation of the current year matching the $200,000 or $300,000 previously measured. The individual must also have earned an income above the threshold, either alone or with a spouse, over the last couple of years. That's the income test, and it cannot be satisfied showing 1 year of individual and then the next 2 years of joint. It's either they're all 3 years are individual, or all 3 years are joint. There's a net worth test or a balance sheet test. And it says to be a credit investor, you have $1 million in assets. And it doesn't say anything about the liquidity of these, but the amount cannot include a primary residence. And the SEC will consider the person to be accredited if they're a general partner, executive officer, or director for a company that is issuing the unregistered security. Okay, so if you're involved in it, apparently you're okay to buy it. So and it is considered accredited if a private business, development company, or organization with assets exceeding $5 million. Yeah, now this is for a business. Also, if an entity consists of equity owners who are recently credited, the entity itself is accredited. However, the organization cannot be formed with the sole purpose of purchasing specific securities. So I get what they're saying there is you can't just combine yourself with other people just to make that work. So there's a lot of problems with what if that was America. If we were what is being proposed by a financial advisor overseas is enormously unethical. And if it's not illegal there, it certainly would be illegal in America, what they're doing. So, yeah, job experience, professional knowledge of unregistered securities. You can also, but again, your knowledge of the risks and just knowing what you're doing with this. Congress modified something here a couple of years ago. amendments to allow investors to qualify on a credit basis on defined measure of professional knowledge, experience, certifications. In addition to the existing tests for income and wealth, the amendment is also expanding the list of entities that may qualify as accredited investors. If there's some sort of group or something that allowing the entity that meet an investment test to qualify. Okay. Knowledgeable employees of a private fund, SEC and state registered investment advisors. Okay, that's something else. Here's an. I don't really want to go over the example because I want you guys to work on it. But also, again, this is going to say the same things. Regulatory authority of a market is tasked with both promoting investment and safe. Yeah. So here, any regulatory authority is tasked with promoting investment and safeguarding investors. That's what the Acts of 33 and 34 and the SEC are for. We're going to talk about those in a second. Regulators have a vested interest in promoting investments in risky ventures and entrepreneurial activities because they have the potential to emerge as multi-baggers in the future. Multi-baggers mean obviously that's from baseball, hitting a home run with guys on base. That's what a grand slam or 3-run home run. It's a baseball reference, is what that is. So for the people who don't know what American baseball is, that's it's not like cricket in India. It's not like cricket. So, but yeah. So again, and we ran into this where someone was operating outside of this authority. And I don't know if Europe has this accredited investor. It has to. It has to. I'll see. Does EU have? Oh, here, European business. There is European business review. Yeah, this is the same thing. This is just another version of this. It comes from individuals. By the U.S. Securities, okay, which is fine. But this is in the business, the European Business Review. Okay, does Europe? I'm just looking online as we're sitting here. So, oops. Oh, this was posted a long time with the United States. Made placement investor on the outside the U.S. Yeah, Greenberg, Traurig. Yeah, though I've heard of them. That's a big law firm. Yeah, and this is about 10 years ago. This is 2013. So credited. Yeah, Europe might not have it. Like I said, because this was it's a country that used the euro, the one I keep talking to you guys about. But they may not have that. So okay, but still, ethically, you should obviously avoid that. Yeah, there's obviously a big return when these ventures are successful, and then obviously there's a big loss, a big probability of failure. Okay, these are risky. They can be concept only research and development activities without any marketable product. regulators have to protect less knowledgeable individual. It's hard for me to believe that Europe wouldn't have this, but individual investors who may not have the financial cushion to absorb high losses or understand the risks associated with their investment. Therefore, the provision of accredited investors allows for access to both investors who are financially well equipped as well as investors who are knowledgeable and experienced. So the accredited investor, the formal process, rather it's the responsibility of sellers such as securities to take a number of different steps to verify the status of entities or individuals who wish to be treated as accredited investors. And they can approach the issuer on registered securities. The issuer may ask the applicant to respond to a questionnaire. If the applicant qualifies, the questionnaire may require various attachments. Okay. Financial statements, balance sheets, account information, tax returns, W-2, salary slips, even letters from CPAs, tax attorneys, investment brokers, advisors. Okay, so you got to be very careful. So it might be this stuff, but again, the folks who are working on this should have known that these guys didn't come close to this. And this is your what do you call it? This is your question, right? That's your question, I think. Yeah, there's like your 401k account. It says apply the gross income test, the net worth test. The net worth is calculated as my liabilities is accredited to define what qualifies a person. Okay, is that okay? So you're going to be working on that. Okay, like I said, I don't want to. I'm not going to blow that discussion, but that's qualified investor for you. Okay. This is I'm not asking you this stuff about FINRA or complex financial products, or am I? Yeah, no, I actually did. I did ask you about that stuff. Okay, no, I did. When I was created. Okay, and we did ask you about some of it. I'll pick one of those to go over because you're asked about this. It says here. Let's look at this. It says under what privileges do accredited investors receive and that others don't. Under federal securities law, those who are accredited may participate in certain security offerings, private placement, structured products, private equity, hedge funds, among in other words, you get a more complicated vehicle or instrument to invest in. Do you need to be accredited to invest in complex financial products? I think you do. Uh, and again, you have to be sophisticated enough to play the game. All right, and there's volatility, risks. There could be losses. Okay, and also, and here, this is a good. It says rendering unnecessary the regulatory protection that comes from registered offerings. So, in other words, you're not having the government looking over. Because I'll tell you this: once you take away innovation, risk, ownership, potential for potential for big payoff. When you're taking that stuff away, you're taking the motivation away to do a lot of these things. Okay, so that's why you have to have risky opportunity. There has to be. They're just because the world will never grow if you don't roll the dice on things. What the SEC is, this was created by Congress in 34. The first federal regulator of the securities market is what the SEC is. Independent federal government regulatory agency. It's there to protect investors, maintain fair and orderly functioning of the securities markets, and to facilitate capital formation. And here, let's do it like this: independent federal government agency responsible for protecting investors and orderly function, maintaining and facilitating capital formation. What is it responsible for? That's what it's responsible for doing. Protecting investors, fair and orderly functioning of securities markets, and facilitating capital formation. That's why you have an SEC. That's why. The referees, right? The referees. Full public disclosure, protect investors against fraud and manipulative practices in the market, monitor corporate takeover actions or acquisitions. It approves registration statements for book runners among underwriting firms. Okay, well, again, that's when you're having IPOs and things of that nature. The issuance of securities offered by interstate commerce, mail, internet, has to be registered with the SEC before it can be sold to investors. Financial services firms such as broker-dealers, advisory firms, and asset managers, as well as their professional representatives, may also register with the SEC to conduct business. For example, they're responsible for approving any form of Bitcoin. If there's a Bitcoin exchange coming, Okay, that's it. That's what it would you would need you know, and that would need to be registered. From services firms, broker dealers, firms, asset managers, as well as okay. So that's those are important. Again, interstate commerce, mail or internet, and if something goes wrong, that's the federal government's first way of attacking it, saying, "We'll use the mail or the internet to do something fraudulent." Okay, that's number one, right? That's always number one. It's a government agency that provides oversight for regulating securities markets and protecting investors. It was established by the passage of the Act of 33 and the Act of 34 in response to the stock market crash of 29 that led to the Great Depression. Okay, so the Acts of 33 and 34 established the both of these. Okay. It can bring civil actions against lawbreakers, but also works with the Justice Department of criminal cases. And, you know, that's you don't number three here. You don't want any of this. Okay. This a relative of mine was a retired law enforcement. He said federal cases are 9 out of 10 times won by the prosecutor. So if it's going to federal court, it's going to be this. The odds are really stacked against you to come out of that okay, or make a deal beforehand is generally the preferred way of doing this. But anyway, the SEC's primary function is to oversee organizations and individuals in securities markets, exchanges, brokerage firms, dealers, investment advisors, investment funds. To establish securities rules and regulations, the SEC promotes disclosure and sharing of market-related information, fair dealing, and protection against fraud. It provides investors with access to registration statements, periodic financial reports, and other security forms through the electronic data gathering analysis and retrieval database known as EDGAR. And when I first started at Value Line, the annual reports, I remember there were these big bookcases with all the different companies that we covered, and all the annual reports were in there. Okay, they were stacked in there, and they were published by the company. It wasn't, I mean, you could print them out yourself too for your desk if you wanted to, but there was a library of these reports. I don't think there could have been a couple per year or something like that, per company per year. But that was a lot of paper. I remember looking at that when I walked in there. So it was created in 34. The SEC in the wake of the investor to restore investor confidence after the 29 stock market crash. There's 5 commissioners who are appointed by the president. One's the chairman, and the chairman's term lasts 5 years. But they can serve another year and a half until a replacement is found. Gensler, I took not bit cryptocurrency. Gary Gensler. I took it online at MIT a couple summers ago with Gary, and I knew the guy. He was a little, he was a little prickly. A sad story though. He told the class a sad story about he lost his wife young. He's got a couple daughters and all that. So it is a tough story to sort of hear that. He worked for Goldman Sachs for a number of years. Raised a lot of money for the Democrats. Was Hillary Clinton's finance chairperson for the 2016 election or 20 whatever it was 16 the 16 election. So, and also the law tries to promote nonpartisanship where no more than 3 of the 5 commissioners can come from the same political party. So you can't have all Democrats, you can't have all Republicans. Okay, it's most likely 2 to 3 right now. Two Republicans, 3 Democrats. But here, let's see the SEC. Let's check it out. Let's see what that composition looks like today. Over here, SEC. Oh, here we go. They actually list it as the broken up pieces here of this. Commissioner. Okay, Democrat, Republican. So it looks like 1, 2, 3, 4. Gensler is certainly Democrat. and there's 4 more. Yeah, of course it's tilted. Of course it's tilted to it's 3-2 Democrat. Yeah. Who didn't know that? Who didn't know that? Who didn't know that it would be 3-2, right? Who didn't know that? So Republican chairman, yeah. Case Western, Yale. She's an attorney. I bet you they're all attorney. So Uday, he's an attorney, Republican, Asian American. Didn't know that. Okay. Diego, Texas Austin. Like he's Democrat. Gensler. Okay. And Carolyn Crenshaw. Oh, okay. She was in the Army and was an attorney there. Okay. Okay. Well, whatever. Okay. So yeah, so it's 3-2 Democrat. Big shock. He took off it a couple years ago, promoting nonpartisanship, no more than 3. Okay, we said that already. Okay. And the goals are to interpret and take enforcement action on securities law, issue new rules, provide oversight of securities institutions, coordinate regulation among different levels of government. There's a couple divisions. We're not going to go over the divisions, but there's corporate finance, enforcement, investment management, economic and risk analysis, trading and markets. So again, people, when you're going to regulate this is not just hey, there's a parking complaint somewhere. This is complicated stuff. So you've got to have people who attorneys, well-educated people are working on this. Now, again, the SEC only brings civil actions in federal court or before an administrative judge. Criminal cases come under the Department of Justice, but the SEC can work closely and sort of support a criminal case. Support a criminal case with the Department of Justice. But again, we're in such uncharted territory right now. It's tough to figure out what's really going on anymore. That's for sure. So it's a little confusing. There's injunctions, again, a court order to stop future violations. If the person who ignores it can be, and people always until there's a consequence, people say, "Oh, it's just a piece of paper," but until you're fined, until you're imprisoned, okay, then that's a problem. Okay, money penalties, and this unfortunately, Donald Trump is facing a lot of this stuff, and it's rather uncharted territory. And again, I've said this a number of times. Forget about who Joe Biden is. Forget about who Donald Trump is. What they're doing and what's happening is what should concern you, not so much their personalities. Okay, too much stuff is based on how do I emotionally feel about this person, and that's a little that's not serving you. That's not serving a good interest by thinking like that. Again, the SEC can bring a variety of administrative proceedings heard by internal officers and the commission, cease and desist orders, revoking or suspending registration, imposing bars or suspension on employment. Okay. And the SEC is the first level of appeals for actions sought by the securities industries, self-regulatory organizations, FINRA, or the stock exchange. There's a whistleblower provision. There's an office of the whistleblower from the Dodd-Frank Reform and Consumer Protection Act of about a dozen years ago. And you can be rewarded if there's an enforcement action, and you can get some of the money and things of that nature. And actually, there's a guy, he went to Boston College. I think his career now is doing that. It's collecting that 10 to 30% on sanctions and proceeds. I think he was the guy who exposed the Bernie Madoff. I saw a documentary a couple summers ago about him. He exposed the Bernie Madoff situation. So sorry, folks. Sorry about that. The market crashed in 29. Securities issued by numerous companies became worthless. And because there was false or misleading information, public faith in the integrity of the markets plunged. And to restore confidence, the Congress passed the Act of 33, the Act of 34. okay, which created the SEC. The primary task was to ensure companies made truthful statements about their business, and broker dealers and exchange treated investors in an honest and fair manner. And we always wish, no matter where you go, you always wish for that. These are some other acts, if you want to read them: the Investment Company Act and the Trust Indenture Act and Sarbanes-Oxley and all these other acts. You want to read those. Okay, and again, the SEC brings numerous civil enforcements against firms and individuals. It involves every major case of financial misconduct, directly or in conjunction with the Department of Justice. The typical offenses prosecuted by the SEC include accounting fraud, dissemination of misleading or false information, and insider trading. After the Great Recession, the SEC was instrumental in prosecuting the financial institutions. That's almost laughable, but okay. The cause of crisis and returning billions of dollars to investors. Well, okay. It charged 204 entities or individuals and collected close to $4 billion in penalties. Wow. And disgorgement and other monetary relief. Goldman Sachs paid $550 million in a fine. Okay. WorldCom paid that in a fine. Okay. But these are gigantic companies, okay, with trillion-dollar balance sheets. So, and certainly there's criticism they didn't do enough, all those things. Quickly, what the Acts of 33 and 34 are. The Act of 33 created and passed law to protect investors after the stock market crash. The legislation had two main goals: more transparency of financial statements so investors can make informed decisions about investments, and to establish laws against misrepresentation, fraudulent activities in the securities markets. The SEC was really created in 34, but the Securities Act was the financial statement, really about financial statements and what information you're putting out there so you can make an informed investment. Again, it's the same old things here. They were created to protect investors and to promote confidence in the financial markets, create transparency in financial statements of corporate. So, yeah, the Act of 33 was really financial statements. The Act also established laws against misrepresentation. And this just talks about who did it. But, truth in securities law is another way to look at it. The Federal Securities Act is another way to look at it. The 33 Act is another way to look at it. Registration ensures that companies provide the SEC and potential investors with all relevant information by means of a prospectus and a registration statement. The first major legislation regarding sales of securities. Prior to this legislation, the sales of securities were primarily governed by state laws. And then the legislation addressed the need for better disclosure by requiring companies to register with the SEC. Okay, is what that is. That's the Act of 33. Okay. And here's what's generally in the prospectus: description of the company, description of the security being offering, information about the management, financial statements have been certified by independent accountants. That's the 33 Act is really what that is. It's prospectuses and registration statements and fair dealing, okay, and laws against misrepresentation, laws against fraudulent activities is really what that is. And this is a part of Roosevelt's New Deal. A uniform setup to protect investors, and again, this is took power away from the states and put it in the hands of the federal government. It's governed by the Act is governed by the SEC, and which was created a year later by the Securities and Exchange Act of 34. And there were a couple amendments passed. The Act of 34 was created to govern security transactions in the secondary market, ensuring greater financial transparency and accuracy and less fraud or manipulation. The SEC also authorized the formation of the Commission. The SEC Commission has power to oversee securities, stocks, bonds, over-the-counter securities, markets, and conduct the financial and the conduct of financial professionals, brokers, dealers, investment advisors, and monitors the financial reports that publicly traded companies are required to disclose. Okay, so the Act of 33 makes you the disclosure. The SEC was created in 34 and then monitors those disclosures, which is really and again how what the rules are for secondary market transactions and activity. Okay. All the companies listed on the exchange must follow the Act of 34 requirements outlined there. Fairness and investor confidence are big pieces of this. Registration of the securities listed on the exchange, disclosure, proxy solicitations, margin, audit requirements. The purpose is to ensure that an environment of fairness and investor. Again, we're going to keep seeing that word over and over again. Fairness and investor confidence. Fairness and investor confidence. Okay, those are big words for what we're doing here. You're listed on an exchange. You have a disclosure as to what the company is, or for proxy solicitations. In other words, selling shares. Margin, audit requirements. Okay, so the statements have to be audited, signed, right, by an accounting firm, that we stand by these numbers and we believe them. And again, there's multiple divisions. There's a couple of trading. We discussed that previously. And SEC has the power to lead investigations and violations such as insider trading, selling unregistered stocks, stealing consumers' funds, manipulating market prices, disclosing false financial information, and breaching broker customer integrity. The SEC enforces corporate reporting, but for corporate reporting, you have to have 10 million in assets and you have to have shares held by more than 500 owners. Why do why would you want, why would you want to have to report to the Cyprus Exchange or the London something? Why would you want to do that? Why would you want to do that? Okay. That's it, folks. Thank you. Thanks, folks. And work on the assignment, and we'll see you soon.